So let's talk about what an edge is in the market because this is critical. To not be gambling and actually trading with a system means you have an edge in the market. And an edge is simply put a consistent and repeatable system for entering and exiting the market. I know it's not that complicated. It's actually really simple. But that's what an edge. It's something that consistently and repeatedly gives you a high probability setup so that way you can become profitable in the markets. It's what gives you that slight advantage over just taking random trades. Now, when we establish an edge, this is something that we go and back test to then get a lot of data on so that way we know when we're trading that we're actually doing the right thing and that it's going to have the outcome that we want to. Now, your edge in the market can be involving swing trading, which is taking very long positions that you're holding for a long time. It could be intraday trades, which is primarily what we do, where we're entering in on the 15-minute time frame. Blah. We trade the 15-minute time frame day in and day out, and we're usually in the markets for anywhere from 45 minutes to an hour, sometimes up to 3 or 4 hours, and so that's intraday trading. Swing trading can be for days, weeks, or even longer. And of course, scalping is very short term, where you're in for seconds or even minutes in the market. And that'd be trading like the 1 minute time frame or the 5 minute time frame. We typically do not go any lower than the 5 minute time frame because when you get down to the 1 minute time frame, you just run into a lot of volatility in the market. So your best edge is going to be 15 minutes or higher, which we're going to cover in later videos. But your edge could also be a system of taking stock positions where you're buying and holding a stock position. It could be with options trading. You could be trading cryptocurrency. You could be trading futures or Forex. Your edge could be in any of these markets, but all the edge is it's a consistent and predictable way that is a high probability setup, which means the probability is that you are going to win when you execute this edge with these rules, okay? And it's based on historical data and patterns in the market. So you must have a defined edge and you must stick to it. It's important to note that we trade probability. When we enter the market, we are entering at a place where there is a high probability of success. And there's different kind of grades of trades. Some trades might be an A plus setup where it is like when you see this, it goes into profit like almost every single time. That's like an A plus setup. When all these conditions happen, we consider this an A plus setup. Or you might have something that occurs in the market where some of these conditions happen, but not all of them. It could still be a great trade and a great setup. Now, the less things that there are that are all kind of pointing in the same direction, the worse the trade setup gets. And so we look for trade setups that have a high probability. So there are multiple factors all saying the same thing, giving the same confirmation that yes, price should react from here and be going up or down in the market. It doesn't matter. All we're doing is we're predicting either the rise or the fall of price. And as long as we're predicting that correctly and we're on the right side of money, we're going to win and make profits in the market. Now, another important thing when it comes to your edge is you must know what your average risk to reward ratio is in the market. And what that means is if you are risking $100, for example, you are looking to make at least $200. So you want to see at minimum a 1 to 2 risk to reward trade, which means for every trade I win, I'm giving myself 2 more chances without risking my initial capital that in the market. So if I'm risking $100 a trade, if I lose 2 trades but I win 1, I'm at break even. Now, when you do that at minimum a 1 to 2 risk reward ratio setup in the markets, and you're winning 60 to 70% of the time, which should be your target win rate, you are moving your account forward. Now, there is nobody out there that is winning every single trade. It just doesn't happen. Even the best A-plus setups can still fail sometime because of market manipulation or other factors. So there's no such thing as a 100% success rate. But when you become really good at trading, your success rate continues to climb, and so does your profitability because of scaling. See, the same edge that you start with is the same edge that you are going to continue to scale with as your accounts grow, and you're going to make more and more money because the only thing that changes is your contract sizing, which means each time you trade, you have more contracts in the market or more stock, and you're taking a larger risk, which means a larger reward because your account size can handle it. So remember, your edge is simply just a consistent, predictable, repeatable way of entering and exiting the market, which gives you a high probability of success. And we are just simply trading probability. See, the difference between gambling and trading is gambling is just a random outcome and a random clicking of the button based on emotions and feelings or a hunch. But when you have a proven system and a proven edge, now you are on the path to becoming a successful trader who consistently takes profits out of the market. I hope you enjoyed this video, and I'll see you in the next one.